I will start my discussion for the day. What are the things to learn? We have to see what is the pre-scene and how to analyze that. And we'll do a couple of activities to understand how the exam will come, and we will prepare for it today. These activities are for learning purposes, so you are most welcome to ask any questions. And obviously later we have full-fledged exams practices, which is called mocks. And very important for us what to write. So the section 3 of this lecture is study notes, which will give you the points to write in the exam. So these are also very, very important. So this is an extract of the pre-scene that you are going to face in which you already have received. And it has certain sections: introduction, warehouse handling. Robo is the company that you work for as a senior finance manager and report to the management. What products they deal in, what is an annual report, how the board of director looks, and what are the board responsibilities, and what are the principal risks associated with that. But the most important today, because all of us have a financial background, so I'm going to start from section 2, which is financial. So it's going to be very interesting because this is our day-to-day work, and it will build up your confidence. And this area is very helpful to get the passing score, because you have to score 50% out of 100, and this is 33% of the exam. So if you get good grades in that, other areas will let you pass. Just for a revision, your exam is 3 hours and there are 3 sections. So today we are going to discuss the full section 2, which is 60 minutes of your exam. It has 2 tasks which are equal, so 50-50. So means there will be 2 parts and 50-50 is the weightage. So means equally you have to divide your time in order to respond them, and in terms of length also they will be the same. This is very important for all of you. Even you are doing your effort, you started or you didn't start, but at least you should know what is the exam structure, how many minutes, how it will start in. So that's why I put this slide again for you, that today we are preparing ourselves for 1 hour of exam, which is financial, which we are preparing ourselves for two questions, which is 50-50%. Total, this is 33% of the exam. You know that this is 33, this is 33, and this is also 34. It's quite a major portion we are going to discuss. Now, as I told you, in your whole case, I'm going to start my discussion from financial, which is extract from the competitor financial statements and share price theory. Okay, so RoboRice, I'll call it shortly at Robo because it saves time and effort, is one of the 6 major companies that compete for design and implementation of automated warehouse system. Now, this is a company who is good in design and build. If you work for a contracting company, you can understand that the client comes to you, they want to make a certain business, maybe a hotel or a hospital, so there are designers who are specialized. Generally, a designer who is specialized in hospitals will be very good to be used to make a new hospital because he knows in and outs. Same way, a designer who is good in making restaurants will be good to use in place of one that who make hospitals, because there are a lot of things inside in terms of build and design which can help. So Robo is an expert company in terms of designing the warehousing and implementing it. Not only design, but they build also. Its most direct competitor is PavRobot. So now, strategic management, strategic case study. We always look financials in comparative with our industry or competitor, because if you compare yourself with yourself, this is not a good way to do. We need to benchmark that what others are doing, what are their accounting ratios, profitability, probabilities, return on investment, interest rates. If you don't know about others, you cannot lead the other way around. So that's why this case put you in a situation where we are going to compare ourselves financially now in terms of our competitor. They manufacture autonomous products such as carousels and mobile robots. So obviously, um, it's not sometimes that you need a to A competitor, means exact to exact competitor, but they are in competition in mobile robots and console. So company does not manufacture or non-autonomous products, means which are not autonomous. Indeed, it sometimes specify robo shelves when it design clients warehouse. So they are competitor and they are customers as well. Couple of time I saw in the industry, there are people who are competing with other in sales, and same time they are buying and selling things from each other as well. So Robo and Pavro both frequently bid against one another for the warehousing contract. So they are competitors, they are stakeholder, they are vendor customer in the relationship as well. Now, in what I did is, because it makes more sense that we take the both companies and we compare one by one. So you can see that who's bigger, who's smaller in terms of turnover, who is doing better performance in terms of sales. So let's focus on Robo, which is our company. We work for that, and we need to know that what happened since last year. So last year was 2021 and this year is 2022. So you can see that revenue from 13.8, because figures are million, we can call them like 13.8, 14.9 it becomes. Even in exam, you don't need to write 13, 867. You can write it was 13.8 and it is increased 14.9. So we have to see how much percentage change has happened. 2%, 5%, 6%, 7%. Same way, you can see as the sale increase, the cost is directly associated with it. Profit also increased, but the fixed cost is the same. Finance cost taken as a fixed cost, it is same. So it means that there is no additional financial obligation has arisen this year. That's the way you need to play with the figure, understand them, and this is the strategic way of doing things. Now, if you can see, because income has increased, obviously profit has increased, and profit has increased, mean taxes also increasing. So both way around, we can say the company is growing. It is better than last year. In a very simple way, without having much information about anything, we can say that the upward growth. How much growth is nominal growth? 7% sale increase, which is okay. We have to see what are their budgets, how much they are forecasting. These extra information we have to look around. Now look at the competitor on the right side. Your competitor is bigger than you in revenue because you are making 13.8. He's making 17.09. So means that your competitor is slightly bigger than you, and your competitor also growing, and you have to see how much percentage growth we get over the period of time. As I told you, when the sale increase, of course, cost also should increase. Finance cost or is remain fixed, so means there's no additional funding. So maybe it's an industry trend that the industry is not in the growth pattern and they are not taking new loans and all that kind of things. So this is also a very important point in order to consider. And you can see the tax is also increasing and the profit is also increased. So top of it, if you see the income statement of yourself and your competitor, so you can see that the industry is going good, market looks good, external market, because all the key players are growing. So this links you with the external environment and macro situation. Now, moving forward, we have a statement of changes in equity, which is also in your company, and this is your competitor. Now you can see that in terms of balance sheet, your competitor is also bigger than you. Slightly, but they are bigger than you, that's for sure. So you are not a market leader for sure, but in your product, you can be a market leader. It depends how you want yourself to be named as market leader. Is it in terms of innovation, products, services, or you say my turnover is the highest, so I am the market leader. So in terms of turnover, you're not a market leader because your competitor is the market leader. Yeah. So let's say your share capital, your retained earning, which is your profit for the year, which has been retained, not consumed. And then you have some currency reserve has been withdrawn. And so profit for the year is coming from the income statement. You can say 1.8, this is coming, and this is 2.6, which is coming from your competitor. So this is a connectivity of financial statements. Very interesting thing is that the company has given dividends to the shareholders, and here also company has taken some shareholders. Approximately, if we see they are 20, say 3% of the profit, which sounds like a discussion. Because in strategic case study, there are standard questions to answer. Your paper is known to you. Like, for example, you have to write a paragraph about dividends. You have to write a paragraph about revenue movements, cost movements, profitability. Then you have to talk about a couple of other things. One of the most important is the share price, which will come shortly. So let's hold it for yourself that you need to understand the dividends. Now imagine if your company, you got a lot of profit this year. So what you're going to do is you're going to give a lot of dividend, means return on the profits or investments to the shareholders. If you give 50% of the amount, so means that the company left with only 50% to grow. So when we give a lot of dividend to the shareholder, we feel that company is not growing. Shareholders are very happy because they got a lot of return. But what about next year? Next year, if you don't have profit, you need to give them a less dividend. And this less dividend is going to make them think that you are not profitable anymore. So let's pull out the money and put it in some other company. So dividend policy is very, very important. And you need to understand that how to address this dividend in a strategic way. Means if company paying 23%, so is it a good amount? Is it a less amount? It is more amount. It's an impact for shareholder. Is it going to impact the company operations? That's the way we need to start thinking on that. Loss on translation means that what is translation? Whenever you transfer one money to another money at a certain date, not a transaction. Transaction we do every day, so that's a transaction gain and loss. Translation we do generally once in a year on the accounting date when we close the balance sheet income statement. We translate a dollar into dirhams, for example, or Saudi Riyal. So that time there is a deviation comes in, that will be taken as a loss or gain on the translations. So this is a comparative view in terms of income statement, which has been given to you. I called it as a profit and loss account. And then changes in equity means this is the shareholder, because this is a strategic case study. So we don't go for profitability analysis or working capital analysis. This is operational level stuff. Strategic is more into book value, share value, dividends, changes in equity or balance sheet. Okay, let's see the statement of financial position. In old books, we called it as balance sheet, but new name of that has been as financial position. So you can see that even the balance sheet is improving. 7.6 become 8.1. Goodwill remain always same until it doesn't impair. So we can say the company is stable. There's no impairment in terms of goodwill. What is impairment? When the assets goes down, when the market value of the assets goes down drastically, we don't know what's going on, market is in collapse. So we call it as impairment. Anything that you need more explanation, you can always feel free to ask. Don't wait for anything. Software, so they develop a software, internally generated softwares can be capitalized. This is an accounting standard. So they make it as an asset and they will amortize it over the period of time, like a depreciation, because it's an intangible asset. Inventory has increased, so means sale has also increased, or purchase cost of goods sold also be impacted. And then we have a trade receivable also increase. You can see bank has also increased. Now, if you see, here is my observation now, because the more strategic you will become, the more analytical you start thinking on. So I can see it's a 8.1, or you can say turnover. In terms of turnover, this is 14.9 million, say $T company, and look at their cash position, 167. So this is my observation and your observation also. And this we need to write in our exam, that the cash position looks very poor because they have very limited cash in comparison with their revenue. So there's something that we need to address in terms of cash flow management, because this much cash is quite less to expand, and it will create some kind of concern in terms of financial sustainability in terms of cash flow. So this is here very, very important. But if you see, the competitor cash is quite better than them. So our company, Robo, which we are the employee, senior finance manager, we have a concern now that the cash level is seems not optimal. So here it will create some kind of discussion that need to be used in your real exam, and in mock practices we will also discuss this point. Now this is a total asset. You can see asset in terms of assets, the company is 24.7 T dollar company, which is quite a good size. And if you see your competitor size is bigger than you, they have more revenue, they have more assets. Now let's see your competitors. They are also grown up. They also have some acquisitions in the past which create a goodwill, and there's no impairment because they review it every year and they come up if the market value of this has gone down, so means the market looks stable. Software development also they are doing, and inventory has increased. Trade receivable also have increased, and the bank level also increased. It's better than Robo. That's what is our observations in terms of financial position. Now, if you see, like, we got a lot of points to analyze in profit and loss. We have to see the revenue changes. We have to see in statement of changes in equity. Dividend is a very important point. Loss on translation also shows that there is a currency gain and losses. So we need to advise in our exam, final exam, that they should do hedging. Hedging is a process to control your losses on currency, interest rates, fluctuations. So these are a couple of points that are very, very important. And obviously here we can criticize about the cash position, and we can do also talk about goodwill and software development. What is the basis of the software development? Now let's see the other side of the financial position, which is called balance sheet previously. So we can see that they have invested 800, here they have invested 1,000. So their even invested share capital is more than you. These are the reserves that they have more than yours. Retained earning is also more than you. So you can see that this year they have no borrowings. This is also very important consideration for sustainability and a strategy point of view. If they didn't borrow, means there isn't either they have enough cash flow for investment, or if they didn't have, then they didn't invest anything, they didn't borrow anything. Same way, the competitor also. So we can see maybe this year in industry is not a year of boring, right? So there are, symptomatic behavioral competitive based assumptions that we can build up based on our analytical abilities. Here we have trade payables has increased on both sides and tax liability as the profit has also increased, so tax liability also increased. We have 24.7 and here 29. So this I already explained you that this company Robo is financially doing a good job. They are better than last year, and the competitor is bigger than them, and they are also doing better. So means overall economic condition in the country market is good. Now, this is some observations of financial. So no matter you are talking about robo or power road, or you are talking about warehouse in industry, this is airport industry, this is a different case study. Every time there's a new case, doesn't matter at all. The things that we need to learn as a strategic case study student is the same that I told you. Look at your eye on revenue, profitability, and your changes in equity, your dividends, your translations, and your in financial position, you have to look around the assets, see the liabilities, see the share capital, and any kind of unusual activities happen in your company or your competitors. You need to look into all in detail. So this was a very important discussion, and now we are moving forward to another discussion called share price. Now, strategy or strategic manager need to look around business, finance together. So if your business is doing good, your share price will also go good. That's the combination that we can handle or understand. And you can't say finance department is really good, but the sales department is not good. And then organization will lose. So they are all connected. So if we do good news comes in the market, our share price goes up. If the bad news comes in the market, how the bad impact on the share. This is the hypothetical connectivity between in large size countries like Nasdaq in New York or London Stock Exchange. They are like that. But there are some small countries, their stock exchange are not true and real. They are manipulated. So this relation, what I told you, will not be so evident. Now you can see that he gave you a graph. Here he is taking the price of the share, and here he is telling you the timings throughout the time. So you can see that this started and then it go here and then it is in the very low point. Now the question is that why like? So what did the share price touch between 250 to 300 graph? So that's the very important consideration. We always write a paragraph about the share price movement in the exam. We always try to write something about, because this is strategic and you are writing section number 2 answers. Sometimes we see that there's nothing asked about share capital, but without share capital, without dividend, without revenue movements, without competitor discussion, you cannot pass your exam. And there is a high weightage of reproducing the pre-seen information. So this is pre-seen information, which is we will prepare, as we have just started, some small paragraphs to reproduce related to share price, related to dividend, related to the translation and the revenue moments. Then examiner who is checking your exam, the exam marker, will be feeling really excited about your response to the questions. Now, so my question is that I would like to know what they did, what the company did. The share price got really high, and what they did, they couldn't gain the attraction of the investors. So what blunders they made? If we see financially, they look sound, but in terms of their share capital movements, there seems a big blunder in the corporate strategy management, which is we will try to figure out. Now, very interestingly, you saw there is a concept of beta. So we always write about beta. Beta is given in the exam, in the Preseen, and we calculate now, which is called ungeared, G-E-A-R-D, ungeared beta. This ungeared beta is really amazing. It purify a little more things. Obviously, it will be always less than the normal beta. Now, what is a beta? Beta means that once you get sick, you get a thermometer and you put your in the air and you get your temperature. So same way we have similar kind of temperature monitoring between your share and the market. You are strong or market is strong. This is what we need to figure out. So normally, if the market is changing equal, you are changing equal, it is change 50%, 50% divided 1. 50 divided by 50 is 1. So if the share is changing and the market is changing equally, the beta is 1, means no problem. But if the share price, your share is stable, market is fluctuating, so means it's good for you. You are less than 1. But if it is more than 1, means your share is deviating too much and market is stable. So both scenarios can come in, and that's why beta is really important. And I'm going to build up some information around it very soon. This is just a pre-seen case study. You have read it yourself. I'm just trying to add strategic thinking, keeping the exam format in my mind, that what way you should read it, because the perspective will change everything. When we watch a movie, we can have different perspective. Sometimes we just want to kill the time, we're not focused, but sometimes we want to learn, so it will be a different. So what approach we should have, that's the most important point that you need to build up with me together in these classes.